एक मिनट रुक जाओ, रेडी होने दो. चलो ये कर लेते हैं. This could be a great intro.
Hi, I'm Akshay.
Hi, this is Saurabh, and you are listening to the Founder Thesis podcast. We meet some of the most celebrated startup founders in the country.
And we want to learn how to build a unicorn.
Hi, this is Ram here. I am founder of Hyperface, which is a fintech company based out of Bangalore.
They say that during a gold rush, it's the people selling the shovels who make the most money. Right now in India, there is a sort of a gold rush of BNPL, or buy now, pay later, which is essentially a form of lending. Companies are raising billions of dollars to offer BNPL services to merchants. And this is where a company like Hyperface comes in. Hyperface is building the rails of BNPL. Essentially, they're selling the shovels in the gold rush. And what Hyperface does is it allows any startup to offer BNPL to their customers without worrying about KYC, bank collaborations, credit risk underwriting, and so on. Essentially, offering BNPL is as easy as getting a payment gateway. Ramanathan RV, or Ram, the founder of Hyperface, is a serial entrepreneur. In his last stint, he was the founder at JustPay, which was also a payment solutions company, where he was trying to solve the problem of the user experience during payments. Not only that, but he was also the man behind the Bheem app, which was amongst the first UPI apps in India. Listen on to Ram talk about his fascinating journey and get an insider understanding of the fintech space.
Once you think about starting out, that thought never leaves you, right? What had happened during that time is that companies like Flipkart had grown again. Still they hadn't attained unicorn status at that time, but they had become a household name for a lot of people in the country, right? And the startup ecosystem started thriving. More venture capital money started coming into India. Tiger Global had placed a bet on Flipkart, right? And it seemed like that the moment had arrived for Indian startups, right? We were so this was a time when I, along with Vimal and I go way back to Amazon days. We worked together at Bank Bazaar as well, and we were discussing perhaps this is the time for us to take on a much bigger challenge, go and solve a difficult problem, a practical problem, right? So we shortlisted a variety of ideas, and we were iterating on those ideas. We were looking at real estate, we were looking at education tech, and then we zeroed in on payments eventually.
Okay. And what was the thesis, like the original problem statement that you were going to solve?
Yeah. Look, again, we love to keep things very simple, right? Looking at this philosophy goes back to the Amazon days, where the KPIs, the outcomes are quite simple. Okay. In Amazon, the philosophy is how do I offer a product at the cheapest price to the customer, right? And how do I create much wider selection that's possible, right? So Amazon had this interesting thing called buy with one click checkout. Right, and this really added a much better conversion for Amazon, right? And we were looking at that and then saying, okay, how can we bring that kind of an experience to India, right? Again, the bet was that look, e-commerce is going to grow significantly, and good payments is almost like water and electricity, right? A good payments infrastructure is almost like good electricity infrastructure, right? Or a logistics infrastructure. It has to work. It has to be fantastic, right? And what does that mean, right? When you break down that problem, you can see that okay, the number of steps to complete a payment should be as minimum as possible. Yet at the same time, we cannot sacrifice on security, right? So how can we try and achieve both, right? So this was the problem statement that we took upon ourselves, and then we said that okay, let's work backwards and then figure out what it means, and we landed on what culminated to be JustPay.
So was it like a payment gateway service, like say what Razor Pay is today?
Yeah, so look, yes and no. We initially thought that we would have to become a payment gateway in order to be able to solve this problem, right? But look, we were quite clear on the outcome at that time. We were betting on the technology and experience, right? We were not betting on the money moving problem, right? That's a whole different dimension of problem. You've got to account for financial risk and many other factors, right? Whereas we were really betting on the fact that look, the form factors are going to change, and experience will have to be better, right? So how can we just take that problem and then solve for it? Right. So we initially applied for payment gateway, and then we realized that we don't have to be a payment gateway. So what was happening was we would go to a Flipkart, and then they would have integrated with an HDFC or an ICICI bank for processing cards, right? Then we went to HDFC Bank, and then we said, hey, look, we want to be a payment gateway. So HDFC Bank offered the same technology to us, right? And then we were thinking, okay, this is strange. HDFC is offering the same technology to Flipkart, and then same technology to us. We don't get anything special. So then why not use Flipkart's existing account itself, and then process transactions? Because we anyways don't want to be in the money moving part.
So what else is there then if not a payment gateway? You're saying you want to optimize the checkout experience. Isn't that essentially just that payment gateway part of it? Like what else is there? Like
So the responsibility of a payment gateway, first and foremost, is to process the transaction, make sure that the money is received by them, and then they settle it out to the merchants. Right? Everything else is incidental to this. Okay. A good checkout experience, and a very friction free experience. All of that, these problems are all just incidental to that, right? But the primary responsibility of the payment gateway is to assure the e-commerce merchants that the money is going to be processed for them, right? Now this was one of the things that we took off the table, and we said that look, let us focus on the experience, because we if you get into solving too many problems, then you can't solve one problem really really well, right? I remember even at that time when me and Vimal used to brainstorm on this, right? We used to even think like, look, experience really is dictated by the underlying payment methods: Visa, Mastercard, HDFC Net Banking, or a wallet. These are all the payment methods that actually set the rules of the game. Right? So we used to think at that time, look, if Visa, Mastercard started in the 60s in India, right? Sorry, in the US at that time, AmeriCard was the first version of the card based experience, right? Which was very analogish time at that time, right? Now we continue to carry that baggage, and it works fantastically well. Absolutely no doubts about that. But what if, let's say, even Visa, Mastercard were to think from scratch today, given all these technological advancements, right? How would they think about building a payment system, right? And can it have a much better experience, right? For example, what, you can even think like things like today, that Amazon checkout experience that you have in the stores, where you just walk in and walk out, right? And somewhere the payment gets processed by just your facial recognition and things like that. So you've got multiple other dimensions today which can be used to process payments, right? And smartphone is one such dimension, which has become almost universal. I wouldn't say universal, but almost universal, right? uh, uh, now what if, let's say, newer payment methods emerge, and can the experience be better, right? Can we play a role in that? So we used to brainstorm these kind of things, right? And so our minds we were fully set to solve for the experience problem rather than the money moving problem.
so what exactly was the product that you launched? Like where did that fit into the customer experience workflow, like the checkout workflow?
Right. So the first problem that we solve for is that if you have to do buy with one click, then the cards need to be tokenized and stored on file. This is called card on file. right? And this is what Amazon used to do. And once you do that, then the returning customer, say, you go into Flipkart again the second time,
You don't have to enter your card details.
you don't have to enter your card details, right? So you just put in your CVV, and then the process from there is the usual. Rest of the remaining process was just the usual one, right? So this was the first problem that we solved, and then we said that, look.
So, like the HDFC payment gateway did not have this ability to remember the card, and neither was Flipkart doing it natively within their own app to remember the card.
Right. Of course, we didn't solve this problem for Flipkart. They built it in-house. We solved this problem for Redbus. Redbus was our first client. Right. And once we solved this problem, then it took us another year to come up with a much better friction-free experience on mobile as a form factor. Right. So 2014, we started experimenting on Android phones. Android phones were becoming more and more commonplace. And we said, okay, in Android phone, now we have, this is a new dimension. Now, how can we redo the experience here, right? Rethink the experience here, right? So that's how our SDK was born. What today you see, where OTPs get auto captured and then auto submitted on 3D secure page. So we built the initial prototypes in the year 2014, and then 2015 we went live on that product.
And this was with Redbus only, this OTP.
Yeah, so Redbus and Make My Trip were the initial clients for this as well, and this product was a runaway hit for JustPay. Right, pretty much pretty much all top e-commerce companies today use this SDK for automating the experience. Not just that, we also did a lot of micro optimizations. It is we named it a browser for that particular reason only, right? So I don't know if you remember, the Opera browser used to do a lot of client-side optimization. Right? It used to cut down, by default, it used to cut down advertisements and Flash and all of that, so that your browsing experience became much nimbler, right? Much faster. So imagine, at that time, you wouldn't believe the login pages of net banking. A lot of banks used to contain advertisements and a lot of unnecessary elements on the page, making it very heavy. And this was pre 4G, right? So there's a lot of 2G customers and 3G customers. And imagine the login page of a bank taking 10 seconds.
And it was generally not mobile optimized also.
It was not mobile optimized, yes.
Like I remember my Bank of India login had like a very small username, password, and a lot of white space on the mobile. Yeah,
correct. So we optimized a lot of those things. Imagine an Opera for payments, right? So we actually took apart these pages and then we said, okay, let's cut down the elements that do not make sense for the customer, so that the browsing experience improves, right? So what used to take 10 seconds now took only 2 seconds. Right, and this resulted in much better experience for customers and translated to better conversions for our e-com merchants, right? Which is why they love JustPay, right? And all of this was not easy work, right? So we had to open accounts with a lot of banks. I remember, I myself opened 10 plus accounts. Vimal also opened 10 plus accounts.
Okay, so that you test as a customer the experience. Okay.
And SDK also, there were enormous amount of challenges, right? We really had to push the bar on.
What is SDK? Like you are selling an SDK. What does that mean?
Yeah. So in mobile apps, so when you look at an Android app or an iOS app, it's a binary software app that needs to be uploaded to the Play Store, right? So any component that goes into this Android app or an iOS app from a third party used to be called as SDK. Say suppose you want to do analytics, okay? So you will have to download Google Analytics SDK and then you'll have to embed it into your app, right? So for payments, we provided this SDK, and this can now be linked by a Redbus or a Make My Trip into their application.
So this was something that was hosted on your server, and the app would like make a call and or would redirect the customer to a page that loaded on your server or something, or like what is it? Or were you like selling code directly that they would?
SDK is a shipped software, so it's almost like your smartphone downloads the app file, right? So as part of that itself, the SDK also gets embedded. So it's almost like the shipped software of the previous generation of Microsoft Windows, right? So in the app ecosystem, though, Android and iOS ecosystem.
Okay. So like Make My Trip would buy that code from you essentially, and that code would get added to the Make My Trip app. And so this was like a one-time payment plus annual maintenance charge, something like that, instead of a per transaction fees.
Well, that's a very interesting question. Look, Peter Thiel says that it's not only important to create value, but it's also important to be able to capture value, right? And what part of value you're capturing and leaving on the table for the other party, so that they also see the benefit, right? So our SDK always the most important thing about an SDK is that it helps in improving the conversion. So if the conversion for our client used to be 70% before payments to after payments, our SDK would improve this to say 74, 75%. Right now, this results in additional business for our clients. Right. So we would price it at a per transaction level. Okay. So for every transaction that gets optimized or processed by us, we would charge our client. Right. It was not like a one-time fee that we charge them.
But how would that work? If so, again, now, like you said, it's like buying a Windows, like a version of Windows. Like say, I buy a Windows 7 on a DVD or a CD, and I install it. Then how would you come to know how many transactions are happening, of what value, and stuff like that? Because you've given them the code for them to integrate, right? Like,
Okay, so a lot of this also ties back to analytics, right? It's not just you drop the SDK, you actually put the SDK, and then boom, things just work. But also there's this constant feedback loop of analytics, right? We do a lot of instrumentation, and then that data is now in our analytics system, and that's how we used to track how much of conversion uplift are we giving, right? And there used to be a lot of A/B testing also that used to happen, right? We make one optimization. We ourselves would want to measure, hey, is this optimization really working well or not, right? Um, uh, and so we had full visibility into the number of transactions that get posted to our SDK and then processed and then finally.
how would your optimizations reach the app? Would you send it to Make My Trip dev team, and then their team would update the app with it? Like,
So okay, this was the other challenge that I was going to come to, right? What happens in an app world is, and we're talking pre-React Native becoming commonplace. So once you ship an application to the Play Store, there is no way for you to update the code, right? So you've got to then have the cadence of, unlike a website, right? Website can be updated anytime that the website owner wants. But an app requires a deployment into the Play Store. You have to create a new version and then you have to put it into the Play Store, right? Now, what this also means is that, let's say you have 10 million customers and your app is 20 MB, right? So each of these 10 million customers will have to download an update and then they'll get the newer version, right? So this cycle of pushing out a feature to or a bug fix into the app ecosystem was very long, right? You may have customers who are using 5 or 6 prior versions of your app, right? So initially, when we went out with the SDK, we gave a fully compile time code, which meant that every update we would have to go to a Flipkart or a Redbuzz or a Make My Trip saying, hey, please now include the latest version of our SDK. Right? This got tedious because by the time we push out an update, they push out an update, and then the last 10% of the customers download that update. It would take anywhere between 6 to 9 months, right? So we created a hot reloadable SDK, which meant that we could actually make changes to the code in our system and then push a button, and then it would do a hot reload. So the next time the SDK, imagine the SDK is a self-updating SDK. Okay, so the way to think about it is, you've got a shell, and then inside that you've got a software. Okay, the shell remains constant, but the software can keep changing, right? This entailed a lot of challenges, Today, React Native provides this as an easy thing, but 5 years, 6 years ago, this was not the case, right? So we actually took the philosophy of React Native and then we implemented it. We implemented it in our own way for our own requirements because React Native SDK used to be 4 MB in size. Okay, that's a minimum footprint of the SDK. With 4 MB, we can't go to any clients at all. Right? So our SDK maximum permissible was 500 KB. Right? So we could not rely on React Native. So we built a smaller version of React Native ourselves.
What language were you using?
So it's a combination of Java and JavaScript. And JavaScript is something that's easier to learn, easier to wrap your head around, and writing code is also non-verbose with JavaScript. Given this massive explosion of JavaScript developers, but given that Android was predominantly Java and XML, this caused a big mismatch. So React Native was the effort to see, okay, can we have a runtime in Java, but the actual app has to be represented in JavaScript. Okay, and so this almost becomes like your website. Okay, now imagine your website is the underlying React Native, and the browser is the React Native, and on top of that you have the website code, which is basically HTML, JS, and CSS, right? That bundled and rendered there. Right, so that's what React Native. This is the closest analogy that I can give you, and this is how it works actually. It uses browser as a platform, and then on top of that, it had created a sort of component framework, and then you run the HTML, CSS, JS code on top of that. So in effect, it becomes like a website experience, which is why React Native may usually you will find it to be slower. Nobody writes games with React Native.
So this was your product journey evolution. How did the business side of it work? Like, what kind of revenues were you doing? Did you raise funds before starting it? Tell me about that.
Right. So when we started JustPay, me and Vimal, together we put in 10 lakhs and we started. The funding ecosystem was still very, I would say it was very nascent at that time, but it was existent, definitely existent. And we actually raised angel money from friends and family about to the tune of about 50 lakhs in the first year itself, right? And that helped us sustain. We were running a very small. We were keeping our team size to be very small because both myself and Bimal, given the Amazon experience, we could do a lot of things ourselves, right? And we had a small team. Our budgets were small. Harish Shavla came in the second year, and he actually committed 1 crore to our funding, right? And that really gave us a major uplift for us to be able to hire more engineers, right? We had to relocate from Chennai to Bangalore. Hiring engineers at that time in Chennai was very difficult. We sometimes we had to convince girlfriends or boyfriends. Sometimes we have to convince parents. Okay. Right? Otherwise, see, startups were still not such a common thing back then, right? And people had their doubts, right? So, given that Bangalore had a lot of people who are willing to take the chances and jump into a startup, so lock, stock, and barrel, we shifted to Bangalore. And 3 years into the game, when we had significant amount of traction, that's when we took our institutional funding. In 2008, 2015 is when we closed our institutional funding from Axel Partners.
And how much was that?
That was about $6 million. We raised at a very attractive valuation, unheard of valuation for at that time for a Series A round. That's because we waited 3 years and built a lot of traction for our product, right? And the momentum was just there.
What kind of traction did you have by 2015? Like, what was your revenue numbers, or how many transactions were getting processed? And
see, we had our revenue numbers for that year. I believe it was about 4 CR, Okay, and our take rate was 100%, right? So this is all money for us. We used to invoice our clients and then take it, right? So this was quite a good amount of money, and we were keeping our expenses within this, right? And this was growing, right? We were essentially doubling our revenue every year. There was that 10x growth at that time, and from there on, we actually grew double the revenue pretty much every year, double or triple the revenue, right? And the traction from the top e-commerce and ticketing companies, right? That really gave confidence to us and our investors. See, companies like Make My Trip and Redbus, they place a really high bar on experience, right? Which means that they are trendsetters. So once a Make My Trip takes, then every other ticketing company would actually want to get to that level of experience, right? Once a Flipkart embraces us, then every other company would want to embrace this SDK as well, our solutions as well, right? So it was imminent that our solutions grew, our revenues grew, right? So that gave us the confidence. We had tremendous amount of confidence, and our investor also had a lot of confidence in us, and they showed it with a good check.
So what was the funding for? Like, what did you want to use? Because you're operationally, you were covered already. Like, you were within your revenues only, covering ops.
Yeah. See, there were majorly two things that we wanted to do. One was, we wanted to go take this to other clients and then grow this, right? It was the capital for growth itself, growing team, growing sales teams, growing operations teams, and growing data science, growing engineering. All of that requires in capital investment. And the second thing was we also were experimenting with pay later at that time. Now, Buy Now Pay Later is supremely famous today. We ran an experiment in 2015, right? And we had pilot merchants, and then we were running it. We were doing it ourselves.
So you had like a NBFC partner for this, because you would need an NBFC partner, right? Like,
Yes, now we would need an NBFC partner, but because we were running it as a pilot for a very small cohort of user base, we didn't really partner with an NBFC. And at that time, we also had it was not like a 15-day credit period or anything. So we were just delaying the payment requirement by 2-3 days and seeing the behavior, right? Observing the behavior of the customers.
and this risk was on your balance sheet or on the merchant, the e-commerce company?
Actually, the pilot at that time that we ran was a non-risky one. So what we said was that, look, and to the e-commerce companies is what we said, look, you don't ship the product until the payment is confirmed, right? Think of it as being processed by us, and we would follow up with the customers, okay? And the holding period can be up to 1 week as well, right? And if the customer doesn't pay up in that period, then we cancel the order, right? Uh, so it is almost like an escrow kind of a mechanism. But we wanted to understand, what is the level of interest that people had in completing that order, right? And did that period really help them, right? So this was an experimentation, and we wanted to scale it up after observing for a few more cycles.
The goal was again to increase conversion percentage. So, like, say if somebody is getting 80% conversion, this would make it 85%, or
Correct. Yeah.
okay. So you use funds for building this out.
So for these two, yes, mainly for these two projects, right? But what ended up happening was we had to double down on our technology investment itself. So 2016 was the year that UPI happened. So end of 2015, we raised money, and 16 UPI happened, and we wanted to make a much bigger bet on UPI, right? Because this was a moment, going back about that, talking about the fundamental rethink of payment system when you have to rebuild from scratch, right? This was it, right? NPCA was thinking from scratch, saying that, okay, hey, look, now we have new dimensions out there. How can we utilize that and create a fundamentally better payment system, right? And UPI was born, and we went all in.
You must have been the first ones to go all in.
We were amongst the first. PhonePe was also betting completely on. They went all in on UPI as well.
Okay. Yeah, I mean, Paytm was fairly a late adopter of UPI.
Yeah, yeah. Yeah, the UPI journey was breathtaking for us. 2016, while we were doing a lot of work at the protocol level for UPI, working closely with the teams here. Um, Demonetization happened, right? And none of us expected that. But this required a big response from the payments systems as well, because digital payments was not commonplace at that time, right? Paytm had made inroads, but it was still not something that was universal, right? Still had quite a few entry barriers for people, right? So how can we utilize UPI? This was the mandate for NPCI, for the government to be able to take to customers, to people, and provide a digital solution, a truly digital solution on the banking infrastructure, right? And this led to the creation of BMAP. Right, so we started somewhere in November, and within 1 month we actually turned it around. Right, we built the entire. We were very lucky that way, where we were perhaps at the right place at the right time, and uh, we were doing some work for NPCI, and when this particular demonetization event happened, NPCI was looking at an option for building their own application, right? We didn't know the name of the application at that time, so we just called it Bharat Pay, and we built it. uh, and in just 1 month, right? This was like all hands on desk and war footing that we actually got into. That mode we got into, and we were 60 people at that time, I remember, and we were just working on this one, right? Just for 1 month, we forgot everything else, and then we were just working on this one. And we had to build both the server side and the client side application as well, right? So it took a lot of effort, and NPCA was very cooperative. I used to go. I traveled to Chennai and was there for most of the time at that time. That's where the NPCA data center is. So provision servers, database, and application servers, and all of that, and then deployed our code. I iterated a few times, and then ultimately it culminated in Prime Minister launching the app.
So I had no idea that you built the Beam app. And I mean, I think nowhere is this written that it was built by JustPay.
Yeah, we kept it low key because look, the real I think the real achievement, a lot of these kind of achievements happen behind backstage, right? It is not something that we wanted to publicize a lot, talk a lot about, because those who wanted in the ecosystem, right, very close to the ecosystem, people knew, right, and they were the people that we were always trying to impress, right, the banking people and the Visa, Mastercard, NPCI, right. These are the people that really should know that we built it, and we were happy that they all knew.
Right. So this was like a build and transfer kind of a model. Like you built it and you transferred it to them to further enhance and upgrade. Then they had an in-house team to look at that. Then.
Correct, absolutely.
Okay. And how did you enable UPI payments for your clients? Like say Make My Trip and all. Like their payment gateways would be making that available, right? Or
Correct, yeah. So we were playing a very minor role there because payment gateways were fully empowered to process UPI payments, right? But the account management, so in UPI, one of the things you do is you sign up with a Google Pay or a WhatsApp Pay or a Paytm, right? So that requires provisioning of a UPI account, and there are certain guidelines around it, right? NPCA has a huge set of guidelines around what it means for you to be able to give a UPI account to a customer, and the rules around linking it to the bank and then being able to set the PIN, accept the PIN, and then process it. So all of this has a very big rule book, right? So one of the things that we achieved by being very close to the UPI ecosystem was understanding it entirely, right? So we were essentially the go-to guys when, say, someone in Flipkart has a doubt on UPI, or an Amazon has a doubt on UPI, right? So they would come to us. Eventually, we built a very robust issuance infrastructure that we partnered with Axis Bank, and then we offered this stack to multiple companies. The biggest of them today is Amazon, and their entire UPI issuance stack is powered by the JustPay implementation that's sitting in Axis Bank's data center.
Okay. And how is this monetized? Like again, per issuance, like a per transaction basis, or
Per transaction, I think it's a blended model of per transaction plus a license fee. You see, in enterprise software, you always have to get very creative with pricing, right? The value is in the eye of the beholder, but there are also constant fixed efforts that go into making this happen, right? Yeah, you bill on several items, right? So enhancements and license and yearly maintenance, and then on top of that, small amount of money at a transaction level.
Hmm. So post demonetization, what kind of revenues were you at? Like you were at 4 CR in 15 when you raised funds. So by 17, what had you reached? Like?
See, immediately that subsequent year, I think we did close to 10 CR, and after that we did close to about 16 or 17 CR. This was the year when we were building the Amazon Pay UPI infrastructure, right? Yeah, and I think now the company does upwards of 50 CR in revenue this year, I think.
You were with JustPay till 2019. So like, did you like sell it off or what happened? Like,
No, actually, I stepped down from a full-time role from JustPay. One of the things that at that time I wanted to do was look at international opportunity for the company, right? And if you see again, this is one of the benefits of not being in the moving money business, right? Moving money business comes with a lot of regulatory compliances because it's serious business, right? But technology business, unlike that, doesn't have a lot of regulatory underpinnings to it. So, which meant that other geographies where there are similar problems, our system could fit right in, right? So, I was exploring other geographies and seeing which if there is an opportunity for JustPay to expand internationally.
okay. So this was around 18, 19 that you were doing this.
Yeah. So there, the board felt that at that time a lot more emphasis on India business is good for the time being, right? But I had a divergent opinion on that one, where we could hit really big if we go to a different market, because the for what it's worth, outside India, the e-commerce economy is larger, especially in the developed markets, and the take rates are higher as well. Right, your average transaction size, for example, on a Swiggy, if you see, it would probably be about $5. Okay, $5, right? Whereas an average transaction in the US for an equivalent would be about $20, right? Uh, Now, given that at a per transaction level, also your absolute take home is higher, and at a percentage level also, because the developed markets predominantly have Visa, Mastercard, where the margins are much higher, right? So it made a lot of sense for improving revenues by going outside India.
And your product was also fairly portable. I mean, it's not like something which only is built for India, but any e-commerce company anywhere in the world could use it.
Correct. Yeah. So look, here is where, while of course it is portable, now does the problem really exist? Is what is the most tricky question in a startup, right? Which is what we call product market fit, right? Um, is the problem big enough? Is the problem top one, two, three for that particular person that they'll take your solution, right? So what was happening was the world itself was becoming a was transforming itself or coming out of the shackles of Visa, MasterCard, you could say. Right? US is still very homogeneous, but it's changing today. But you look at UK or you look at Singapore, it became very quickly heterogeneous. To give you an analogy here, right? To an example, look at Book My Show. Book My Show's checkout page contains pretty much all the payment methods that out there in India. That's out there in India, and you would see 20 plus payment methods there, right? This is the kind of diversity which is what JustPay really shines when there is such diversity in payment methods, right? Um, Now, what was happening was world over, UK specifically, after they announced the open banking infrastructure, a lot more new payment methods started coming up, right? Giving a lot more choice for customers, right? Be it wallet, be it BNPL, be it open banking, and then Visa, MasterCard, right? So suddenly you had a big explosion of payment methods. And then the same trend was observed in Singapore and neighboring markets as well. And this is the place where once you have enormous number of payment methods, the complexity also increases significantly. Right? And JustPay reduces that complexity so that e-commerce companies can focus on their primary bread and butter and leave the payment method complexity to us. Right? Yeah. So we were. It was not that we were tweaking our product to suit the market needs of the other countries. In fact, the other countries were changing, and our product was becoming relevant for them.
Okay. When you say the board did not agree, but like you must have had a significant stake in it, right? Like because you didn't dilute much.
See, ultimately, everyone should buy into the thesis, right? In a startup, one of the perilous things that you can do in a startup is pull the company in different direction, right? It's better to avoid that because then the outcome really is really suboptimal, right? Uh, if we are sure about a market opportunity and that is a multi-billion-dollar market opportunity, it makes tremendous amount of sense to just focus on that one and keep gaining market share and keep gaining strength, right? And at the right time take the plunge, right? So uh, and these are the tricky decisions, right? And they'll have significant impact in the outcome, right? So it's very hard to figure out or think about what could be an alternative timeline, right? And these are very instinct driven decisions, right? So you may just not feel so then you're not buying into the decision, right? So unless there is 100% buying into the decision, it's very hard to get people to commit their energies into pursuing that goal, right? So that was one of the reasons, right? And look, in a startup you will have so many such decisions, right? There are when it comes to impact, uh, there are only two kinds of decisions. One that involves enormous cost, a very costly decision, and then there are cheap decisions. Okay, cheaper reversible decisions are okay, nobody cares. Okay, but costly irreversible decisions are something that can really put the company in a tailspin, right? Venturing into a new market requires capital. Say you go to the US, you're looking at anywhere between 10 to 20 million dollars, right? Like give you an example, Rails Bank expanded to the US, they went and raised $35 million, right? So it's a lot of directional focus which is required and a lot of manpower that's required to make it successful, right? So unless everyone feels it in their bones and with you, right, it doesn't make sense.
Right. Okay. So what did you decide to do then? Like did you decide, okay, let me work on this idea only on my own, or like what was the what was going on in your mind?
Yeah. So look, the urge is always okay. Hey, look, let's solve a bigger problem. Okay, if solve this problem, perhaps it's a $1 billion opportunity. Now, can we look at a $10 billion opportunity? Or you measure this based on the impact, right? So one of the things that I was thinking is that, look, what could be the most impactful thing next, right? And I always had this inspiration from UPI that networks can create a lot of impact. So this was the time when RBI formally called for new umbrella entities as well, which are nothing but more Visa Master like institutions, right? And this was fantastic because with regulatory support, we could reimagine payment methods, right? Newer payment methods and newer rules of the game, right? And at that time, my thinking was okay. BNPL is taking root and it's capturing the imagination of people. And for a variety of reasons, which we will come to later, as to why BNPL makes sense. But unfortunately, the rules of the games are not fixed in BNPL, right? Unlike a credit card, right? And can a network step in and then fix the rules of the games and create protocols, native protocols that every other BNPL company can come up with and use as standard rails, right? So an NUE offers that kind of opportunity, right? So I joined hands with another NUE aspirant, and I was advising on what all projects that we could pursue uh, uh, for the NUE, right? I'm trying to make a compelling case to get RBI approval for that. Right. So this was the work that I was doing post stepping down from Just Pay, and I also got to advising neobanks. Again, solving very specific problem. For example, you take the SME neobanking. One of the things that always irked me was very large companies had enormous amount of tools to automate a variety of tasks when it comes to vendor payments, for example, salary payments, and your money management tools were very much very quite better, quite a lot better for large companies, right? For small customers, a bank wouldn't even offer this. They wouldn't even say that such a thing is offered, right? And even if they do, it came at a very steep price, both in terms of actual money and in terms of process overhead as well, right? Because think about it, right? Small businesses do not have manpower or auditor or a finance team to handle those process overheads, right? So I was advising a neobank. It's a very real requirement. How do we get the cash management system, commoditize the cash management system for small and medium sized enterprises, right? It's a very real problem. A lot of companies are solving for it now, which is a very good thing, right? And I was also advising one consumer neobanking project as well. And in both these cases, one of the things that I saw firsthand was that uh, yes, I did have experience working with banking ecosystems, right? But in payments, the surface area is very small. You either want to pull money or you want to push money into an account, right? Whereas when it comes to banking, you do a ton of things, right? Everything that a teller does in a bank, all those options have to be present in the mobile banking interface, right? And which meant that now, earlier, if you were interacting with 10 APIs, now you interact with 200, 300 APIs, right? So this increase the complexity, and such complexity is always exponential. It's not linear. Okay. And when you're iterating on top of 100, 200 APIs, things could break very easily, right? Things could become difficult very easily, right? And banks are not the tech companies, right? Like, why would a Google engineer join a bank? Right? Retaining that kind of an engineering talent is also enormously difficult for a bank, right? Because they have a different DNA, right? Just like how a Google cannot do personal loans and home loans, a bank also cannot actually retain a Google caliber engineer, right? So which means a lot of work gets really outsourced to companies, and then which is why you see banking technology is always suboptimal when you compare them to a different say a fintech app, or you compare to a Flipkart or an Amazon, right? Because it is what it is, right? So how can we? The question then is like, okay, is this the status quo that we have to live with, or can we improve this, right? So that's what led me to my next adventure, which we will come to shortly. But this is what I was doing during the interim period, right? Thinking about, say, how can we, at a fundamental level, create more impactful systems for payments and for remittances. And on the other hand, looking at, okay, how can we look at embedded banking? Is there a better way to do embedded banking, right? So these are the problems that I was thinking about.
RBI eventually did not go ahead with the NUE proposal, right? Like
Correct.
nothing came out of it.
Yeah, I'm not sure if they made a final call on that, but I do wish that they revisit that and give the opportunity to at least one or two companies, the aspirants, based on the merits, right? Because I do feel that some disruptive thinking, some rethinking, at the very least, in a very sandbox manner, can be allowed. And given the pace of technology, right, newer methods can easily find takers, and we still have a lot of problems to be solved, right? Say, for example, domestic remittances in itself is a much bigger problem. Okay, the last mile, delivering money to the last mile is still an unsolved problem, right? A feature phone, how do you do digital payments with a feature phone is an unsolved problem, right? So how do you embrace better technologies like blockchain? Again, it opens up newer opportunities, right? What if you can program money, which is what Ethereum is talking about, right? Ethereum and other, if not Bitcoin, Ethereum is talking about it, right? Smart contracts, right? We've already embraced that in a different aspect of our life. For example, the way land registrations are managed, right? Uh, Many other problems like escrows and receivable financing, all of that can be solved in a much better way on with new technologies, right? Enabling these institutions which come with a razor focus to solve those problems, I think would be fantastic. And given that RBI has always been an innovator themselves, I think they should reconsider, issuing limited licenses.
So, and like an NUE would end up being a competitor to NPCI, and it would also need buy-in from all the stakeholders, like all the banks, and for it to really build a product. Like,
See, I don't see competition as the way a defeatist view, right? With a defeatist view, right? I see competition as a more thriving thing. Say suppose this new NUE comes up with a rails for BNPL. Now suddenly, which means that NPCA now will think about, okay, how can we support credit better on RuPay or UPI, right? And rethink the primitives there, right? So I think it would be a very healthy competition, if anything. And the problem areas are too diverse. Okay, so they can carve out their specialities, right? For example, do I feel that there has to be a competition for UPI? I don't think it is required, right? The existing competition is good enough. Your Visa, MasterCard, and the card as a form factor and UPI as a form factor is a good enough competition for themselves. There's no need for another consumer payment method. But other problems like credit and financing, and those are all problems that still need solving, especially B2B payments, for example, right? It needs a lot of problem solving. Very complex use cases will emerge there.
Okay. So tell me about Hyperface. Like, what is the thesis behind Hyperface?
So, see, my experience of advising those neobanking implementation taught me one thing, right? Banks will have to work very closely with tech specialists to be able to enable embedded banking. Right now, every bank almost now talks about partnering with fintechs, and then allowing fintechs to build on top of banks, right? So servicing is now moving to the fintechs, right? In fact, they are becoming very imaginative even with products, right? So otherwise, you will have standard products like fixed deposit, personal loan. Now, if you see, BNPL is a play on personal loan, right? You layer two personal loans, and then you say that, okay, hey, tenure of your one personal loan is 15 days, and then your another personal loan kicks in, and then again, it just layers from there. right? So BNPL is an innovation on top of personal loan. Right. So similarly, there can be many other innovation that can come up with the even in the product layer. But let's put a pin on that, right? Even taking the existing functionalities and then embedding that in a fintech app, that itself is a much bigger problem. And this is where instead of banks trying to figure these things themselves, uh, imagine if they work very closely with a tech specialist that can aid them in doing this better, right? We partner with them and then do this much better way. How can say, when I think about it, the example that comes to my mind is that, okay, hey, can we create the APIs to the level of quality of Stripe? Now, Stripe is a name that everybody understands. It stands synonymous for best, beautiful APIs out there, right? So, uh, even a company that wants to offer savings account or a current account and embed them into their experience would benefit from a Stripe like API, uh, right? And they don't have to spend a lot of time trying to figure out, okay, how does this API work? How does this API upgrade? Right? And I always tell that, look, anybody can create APIs, but can you make the developers fall in love with your APIs? Right? That is always the acid test for an API, right? And how do you think about the life cycle of the API? When things change, underlying things change, say tomorrow the rules of the KYCs change, right? It shouldn't be that now we create a completely new set of APIs. Right? You've got to be able to capture those changes within the given API set itself, right? So, which means a lot more tech thinking is required. You've got to wear a tech person's hat and then think about it, right? And the banks are enormously good at trust, right? They are institutions of trust, right? And they can hold people's money and trust, and that is not going to go away, right? But to demand that they be really strong technology wise also is very unfair to them, right? And this is the gap that we fill. We wanted to take a banking product and then make it much better, right? Make it much better so that very good digital experiences can be built on top of that. And so neobanks can then focus on the consumer value prop a lot more, right? Their experience and their marketing and their messaging, which is what they would have to be focusing on day in and day out, right? While leaving the tech burden on a company like us, right? And we naturally believe, we very firmly believe that a bank cannot solve this by embracing or building technology themselves, right? Uh, just as we can't win the trust of you or other common people to put your money with us, right? It's something that we don't know, right? But we understand technology really, really well. So, which is why we started Hyperface as a bank as a service, right? Essentially, banking as a service is the jargon that people use today. But in if you break it down into the simpler concepts, what it essentially does is it takes the existing banking product and the entire life cycle is now digitized and broken down into APIs, right? And through this APIs, now you can create orchestra of user experiences, right? And we manage this entire life cycle of this software, okay? While the product still remains with the bank. Okay, so this is what Hyperface is about. We chose credit cards as the entry point because if you look at credit card, it's a very complex product, right? It's got credit built into it, it's got experience, it's got rewards, right? And it's got a lot of user innovations built into it. And it's also a challenging product because the terms are not clear, interest rates and fees and other collection mechanisms, right? So it stands on many different legs and it needs a lot more investment in technology. But it's also a product that has enormous power uh, to take credit to every nook and corner of the country, right? Credit penetration in the US is upwards of 90 percentage, right? In India, we are still in single digit percentage. And a lot is required in order for us to take this from where we are to above upwards of 50 percentage, right? And you may disagree on the form factor. Like even I may disagree on the form factor. Should it have to be credit card? No, it doesn't have to be credit card, right? But it has to be formal credit, a credit that is extended by the bank to a customer, saying that, look, I trust you with 10,000 rupees. I trust you with 1 lakh, up to 1 lakh rupees, right? Now that is very important, right? That is where we should aspire to get, because the cheapest form of credit can only be offered by a bank, right? And a lot of efficiencies can be brought into the society if we are able to deliver this in a cost effective way to even the bottom of the pyramid, people in the bottom of the pyramid, right, in the unorganized sector. So a lot of work that needs to be done, right? And we are starting from the top of the pyramid, but eventually we firmly believe that this is a form factor that can scale down into the bottom of the pyramid, right? By that, what I mean is that, today an HDFC may offer you a credit card that has a credit limit of 3 lakh rupees, right? But essentially, we've got to take this product and then we've got to offer a 10,000 rupee credit card to a person. Right? And still, the bank shouldn't have to shouldn't have to go into loss for offering this product, right? So that's what I mean by scaling down the product, but scaling up the distribution.
Right. Okay. So your customer base is the bank, and what you do is you plug into the bank's core banking system and create products which then fintech companies can do API integration with and focus on distribution. So they only need to worry about distribution, and the customer journey is something which you take care of on behalf of the bank.
Correct. Yeah. Yeah. See, a lot of marketing innovation is where the fintechs will focus, right? Neobanks will focus on, okay, how can I create a better product? Okay. How can I be innovative about it? Messaging and product experience, right? So that's where a lot of their energy should go into, rather than solving for compliance and the API lifecycle, and working very closely with the banking system, right? That becomes very cumbersome for the fintech.
Okay. So give me some practical examples of things that you have built. Like, say, for JustPay, you gave me an example of reading the OTP and autofilling it. So give me some examples which make it more relatable.
Yeah. Okay. So okay. Today, if you see, to give you what it is that we are aspiring for, right? Now, a lot of people are aware about Apple launching a credit card, right? And the experience is so kick-ass that it's all completely in-app experience, right? I'll talk about just one small thing, right? When you receive a card, physical card, it is deactivated. It's not in a usable state. You've got to do something to activate it. Now, you typically banks, what they used to do is they would ask you to take it to an ATM and then get it activated. Okay. What Apple did was fantastic. They actually said that, hey, look, your iPhone is authenticated, and all you have to do is just tap the card into your iPhone, and then your card gets activated. Right? And that is just so brilliant, right? It's so brilliant as an experience. Now we look at this and we say that, okay, hey, why can't a neobank in India also offer that experience? Why can't Amazon credit card also have that experience? Why can't the Flipkart co-branded credit card also have that experience? Right? Today, if you see the experience of a Flipkart co-branded credit card and then compare that with an Apple card, right? There's a sea of difference. Now, how can we bridge that difference and then make Flipkart credit card, Flipkart Axis Bank credit card also super sexy, that it is comparable, if not better, than an Apple card, right? That's the experience gap that we are trying to bridge. And this is something today in India, you would not, you don't have a live example, because credit card experience today is very closely linked to the mobile banking experience, right? So far, fintechs have not been able to launch a credit card outside of the banking system, right? So we're sort of first out the gate at the moment. We are still solving for a lot of basic things. For example, how can we digitize the entire application application and KYC process, right? That in itself is a much bigger problem, right? And then comes the card experience, right? So a lot of problems exist.
To eliminate the paper forms that people fill out.
Right. And then we get into the actual card experience, right? So we have a lot of ground to cover. But what is the outcome going to be? An Apple Card experience for every neobank that is out there, every e-commerce company that's aspiring to launch a co-branded card, right? That is the KPI, that is the goal that we are working towards. And as we always say, we like to simplify things, right? So a simple thing is commoditizing Apple Card experience for everybody out there.
So you are also then planning to work with these fintech or e-commerce companies which are offering cards. So it's not just the banks that you will work with. Like one part of it will be working with banks, but then you will also probably act as a bridge and work with the fintechs and the e-commerce companies so that they are just able to take your SDK and create a way for a customer to apply for a card and get it approved and receive the card, and then have a dashboard where they can see their spends and rewards. And so all of that, like you will give it to them in a box, like a credit card app in a box, which can go inside a Flipkart app, for example. So that credit card app in a box would be provided by you.
Correct. Absolutely. Right. So tomorrow a brand can walk into us and they can say that, hey, look, I want to launch a co-branded credit card. And we can help them launch it in weeks, right? So that's our proposition, right? And we'll make it extremely easy, both by way of product and technology, and ongoing servicing of the customers as a very, very easy thing.
Okay. And what is the state of the product? Have you launched something, or is it still like R&D stage?
It is still in integration stage, right? We have, as I said, we have a lot of APIs to integrate with.
Right. Yeah. Extremely complex.
Yeah. But this is like, this is one of the most difficult parts. But we're getting there. We are taming the complexity here. Once the integration is done, then a big chunk of the problem would have been solved.
Right. So in a way, this is like Just Pay version 2 for a different industry, but it is somewhat similar in the basic nature of the product.
Correct. Yeah. This is the other side of the coin, where we're not talking about payments, but we're talking about issuing an account, managing the account, tracking balance, and completely on the account side. Right? Where Just Pay is on the payment side.
And have you raised funds for it so far? Like what?
We've been very fortunate to have really good friends in the fintech ecosystem. We've raised money from from a handful of angel syndicates. Also, Kunal Shah has been a very big supporter from day one for us. It just took him 10 minutes to say yes. And we also raised money from Binny Bansal and a bunch of people outside of India as well. Because we see, again, we see this as an international problem, not just an India problem. So we are very, very clear that we will take this international.
Right. Okay. So you've talked a lot about BNPL, and why is BNPL so hot right now? Why do so many companies want to get into BNPL? Why are investors funding BNPL so massively?
Right. See, you need to understand that the economics of credit cards, right? And banks have very rigid process around credit cards. One of the reasons that you would see that credit cards always have a much higher credit limit, right? Like you would not find in the market a lot of credit cards below a 50,000 spend limit, right? Available credit limit, right? That's because the amount of money that they spend to acquire a customer is very high. It's as high as you're looking at anywhere between 2,000 to 3,000 rupees, right? Now, when you're spending that much money to get a customer, then your expectation in terms of ROI is also very high, right? Which is where, if you see, even for a personal loan, this is true, and that's where NBFCs bridge the gap. NBFCs can offer, say, 15,000 rupees loan, personal loan, or to 20,000 rupees personal loan, right? Without a lot of process overhead.
What MoneyTap does.
Correct. What companies like MoneyTap do, right? In fact, MoneyTap like companies can do 5,000 rupee loan also, right? Credit B, Crazy B, these kind of companies, right?
I think this is also what MobiKwik is betting on.
Correct. And they've all cracked one thing, right? Distributing a product like personal loan at scale at a very low cost, right? And still be able to justify ROIs, right? And this is what the banks have not figured out, right? In India, only banks can launch credit cards as per RBI rule, right? NBFCs cannot launch credit cards. Now, given that the banks have very high cost of acquisition and cost of servicing, it doesn't make sense for them to go to the bottom of the pyramid. Okay. But still, the appetite is there, right? We've seen how Bajaj Finance have been very successful with their EMI card, right? Which means that large part of market is credit worthy, underserved, but their requirement is not a 1 lakh credit card, but a 20,000 or a 30,000 rupee credit card, right? Now, how can that segment be serviced is where the fintechs come in, right? And then they say that, hey, look, I can give you a loan of say 5,000 rupees and then make it a revolving credit, okay? And you just keep using it, keep repaying it on a regular cadence, and I'm happy.
Which is like a current account with an overdraft balance. It is somewhat similar to that. Okay.
Yes, right, and they put the formal shape that this product has taken is BNPL, right? Because see, you've got to give it a name to be able to capture the imagination of people, right? And then keep using that for marketing, and that eventually becomes a common parlance, right?
So BNPL is a parlance for credit card without a physical credit card, basically.
Without a physical credit card, it's a parlance for a repackaged personal loan or a repackaged overdraft facility, right? And that is how now fintechs are marketing this product, right? Tailored towards not towards cash withdrawal, but tailored towards using this in e-commerce portals where it is a requirement. Like if you see Bajaj Finance, while they do personal loan, they give cash to people, but a lot of the EMI card facilities is consumer durable loan, right? It's meant for that, right? And this is what is the segment that BNPL companies are also targeting. So at a fundamental level, this is what a credit card should have targeted. But unfortunately, the economics of a credit card doesn't allow the banks to go into this segment, right? And enter fintechs. They have been able to successfully capture the imagination of people with a BNPL product, right? That they have built on top of NBFCs, right? So technically, it is a personal loan. If you actually look at how this gets reported into a credit bureau, it will be a loan, right? Because credit bureaus also do not recognize BNPL as a product, but they do recognize credit card as a product.
Okay. There are different forms of BNPL. No, one is you have like at the checkout, at the time of checkout, you have that option where you can just split your payment into three parts, or like you have like say that lazy pay and things like that, where you can make multiple purchases and pay at the end of the month or something like that. But what these companies like say MobiKwik are doing is somewhat different, or even MoneyTap. That is like a I don't think that is something which is there at the point of checkout, right?
Yeah, look, finally, what form factor is going to win over, right? Eventually, see, most innovation process works this way, right? You have this.
No, but could you like just categorize these form factors first, and then tell me what you think will be the form factor that will.
Yeah, see, you've got okay, you've got things like say in outside of India, you look at an afterpay. It's got a 6 week payment plan, right? Every week you pay, and you look at an Affirm looks at it differently, right? They have a fortnightly plan, they have a weekly plan. You choose the way you want, right? You've got flexibility. So you look at a Bajaj Finance in India. Bajaj Finance sticks to EMI, right? Because our salary cadence is monthly, right? So they stick to a monthly EMI. Right now, Uni has taken a different approach, or LazyPay has taken a 15-day credit period approach. ICICI Bank Pay Later has taken a monthly approach, right? So it is very culturally driven, right? Say tomorrow when we are looking at a gig economy, for example, Uber and Ola payout will happen twice a week, right? So they for that cohort, when you are taking a BNPL product, you can have higher frequency repayment mechanisms. Right? You can probably have a week long BNPL product as well, right? So the cadence will vary depending on the customer segment that a particular company is serving, right? And accordingly they package this into different products, right? Like a uni, the way they say it is pay in three, and perhaps the target audience is the millennial, salaried millennial, who just wants the convenience of being able to split the payment into three EMIs, right? But a daily wage person will look at it very differently, right? Because they don't get paid on a monthly basis. A freelancer will look at differently. A person in the media industry where the work is very erratic, they will look at it differently, right? So each of these segment will have different product. Like we work with a logistics company where they want to issue BNPL to their truck drivers, right? Now their cadence is going to be different, right? They can say that, look, I only want to issue this in a particular on a particular day of the month. I will have the repayment deadline, right? So it can be a monthly, right? But I'll only give it in these few months when I know that the truck driver is going to be working with me, right? So it's very custom made, very tailor made to their requirements. Right? A Flipkart seller BNPL will look very different from a Flipkart consumer BNPL.
Something like a money tap, that is, I think, essentially just a line of credit which you can use anywhere. Like you can,
Correct.
and that is powered by UPI, right? Or even MobiKwik is like UPI powered.
See, UPI is the spend form factor, right? See, okay, when say I issue credit to a person, and I tell them that person that, hey, look, you can spend up to 30,000 rupees with this, right? But where will I spend? Now, in order for me to spend this, I either need a card as a form factor or UPI as a form factor, right? You go to a Kirana store or a supermarket. These are the only two form factors that are today supported, right? And then there is cash, right? But cash has a problem because cash is very liquid. Cash can be used for many other things also, right? And because these are essentially meant for purchases, uh, you don't want to give it as cash. Then you might as well give it as a personal loan.
So you are building products for both, like UPI based and card based also, or?
Yeah, so we will eventually build it for UPI as well, but today we are focusing on card as the form factor because NPCI still has to come up with more clarity on how to spend via UPI on top of a prepaid instrument. Okay, because UPI today works exclusively on top of either regulated wallets, only exclusively for them, or bank accounts. Okay, it's not allowed for third party applications that run on top of wallet, which is why today if you see a lazy pay cannot process a transaction on UPI even though you will have the spend limit for new users, right? NPCA has actually put an embargo on this one, but they are expected to come up with more clarity. So when they do come up with more clarity, as you rightly said, we will support both UPI and card as a form factor as well.
How does pay later on UPI work? Like you get a new UPI ID which you enter when you are checking out?
Yes, you will be given a new UPI ID. See, it's very similar when you look at a bank account, right? A bank account has a debit card and UPI as well, right? A money tap account or a lazy pay account also is expected to work that way only. Right? You will except that think of it as an overdraft account.
Okay, got it. So MoneyTap will issue you a unique UPI ID, which you can then use for your purchases. And got it. Okay. So what do you think will be the the trends in the payment ecosystem over the next couple of years?
See, we still have to solve a lot of problem, Akshay. The current UPI ecosystem is extremely vibrant. We've been able to take payments down into every nook and corner of the country, right? Which is a fantastic achievement. But credit has not been taken into every single household yet, right? Our debt to household GDP ratio is also very low, which means that there is still a lot of room to grow. And see, debt should always be given as an optional thing, right? I'm not saying that we've got to overburden the people with debt, but if I want to borrow money, I should have the choice to borrow money. I should have the power to borrow money, right? Today, a lot of people are left out of the formal debt ecosystem, formal credit ecosystem. Right now, how do we bring them all up into that facility? Is a lot of this can be solved through payments, right? Payments actually holds a very big uh, very big data input for solving for credit as well, because based on the spend patterns, right, we can easily identify the purchasing power of a person, right? And that's a very key input to figuring out, okay, hey, is this person credit worthy or not?
Hmm. So people who are not in the formal economy, who don't have a pay slip to show, or who are earning in cash, like say a panwala, for example. So for them, access to credit is impossible unless they use a payment app, and that payment app has the data about their spends, and therefore that payment app can offer them credit.
Correct. Absolutely.
Hmm. Hmm.
Yeah.
Hmm. Okay, got it. So, and you would also work with these payment apps like, say, a Google Pay or so on, in terms of helping them launch credit products?
See, in we will definitely work with fintech companies, right? Doesn't necessarily have to be a Google Pay, but I believe that a lot of action will happen in the fintech layer, where think of it this way, right? There can be a very school specific or a tuition center specific fintech app, right? That really optimizes it all for a tuition center, or there can be a very kirana or a panwala, as you said, right? Very specifically targeted to that user base, or it can be your wholesalers, right? Distributors. Now that is a cohort, because the problem statements for these guys are all very unique. For these cohorts are all very unique, right? So we will see a lot of action in specialized use cases, both on the business people side as well, and the consumer side as well, right? So we will work with multiple different cohorts and different fintech companies that are innovating, and e-commerce companies as well, and helping them launch credit card and BNPL products.
Okay. And for BNPL, though, an NBFC partnership or a bank partnership is mandatory as per RBI norms. Like,
Yes. In fact, the law there, if you see, right, in the US, is very clear that if you are making a credit decision about a particular person, then you have to register as a credit institution. Okay. Only because it weeds out a lot of biases, right? There are a lot of guidelines about you making a decision about a person and saying that, hey, look, is this person deemed credit worthy or not, right? Now, in India, in fact, we don't have such a law yet, right? In BFC ecosystem is required predominantly for credit bureau reporting, and being able to get into the formal ecosystem, right? And they are the ones that have access to capital as well, right? So I believe a lot more evolution as well will happen here. RBI recently came up with regulating NBFCs, right, by dividing into four different buckets and then applying very fine-grained regulation, which is it's a fantastic step in the right direction, right? So we'll see many such evolution in the regulatory landscape as well, funding landscape as well, and the fintech landscape as well, right? So overall, we are super excited about this space.
would companies that own data, like, would they replace credit bureaus? So like, say, Google Pay has that data of payments of different users, or say Khata Book, which is again also capturing that data. Would they be replacing credit bureaus and be a better option than credit bureaus for reaching out to the masses?
This is a very interesting question. Look, the few companies holding a lot of data and owning data and keeping it to themselves as a basis to make credit decisions or make rich decisions about credit worthiness and repayment behavior of a customer, I think that will not lead to a very efficient marketplace, right? We need the credit bureaus to be able to serve, be able to react in real time, be able to keep the data readiness in at least near real time, right? Be able to run their algorithms much more frequently than the monthly cadence which they run as of now.
Tell me first, what is the way in which a credit bureau traditionally works?
See, credit bureaus get data from banks on a regular cadence, and then they have their own
And that data is what? That this customer is paying on time. That is it, or like what?
credit issuance, credit rejections, credit repayment data.
What is credit rejection?
So if a bank is rejecting a person on a credit decision, right? So all those are right, and then even the credit inquiry, right? If somebody goes to say 10 different places and then 10 different institutions, and then they are asking for a personal loan, even that gets reported to the credit bureau, right? And the customer is penalized for that because they're shopping around and they're getting rejected mostly from all institutions, right? So a lot of this is given as data input to credit bureaus, and they collect these data points from NBFCs as well, right? So at any point in time, what is the total?
And what do they give as the output then? They give like a single score, or
So the score is something that they do give, but it's a very abstract one. But they also give detailed analysis on the customer, on the historical data points as well become available to you, and the current credit total credit that has been given to the customer, right? Outstanding payments. And even the granular repayments data points are also available with the credit bureaus. And these are made accessible to banks and NBFCs.
got it. Okay. Right. Okay. So, okay, I understand now how traditional bureaus work. So, yeah, you were saying about the problem with them.
Yeah, two things. One is the bureau data has to become even more cheaply accessible. It has to become more cost effective. Then it has to also become real time, right? Like imagine, I am issuing a product where it's a 1 week long credit product or a 2 week long credit product, and the customer doesn't pay. Now this entire thing falls within a month, right? So the ability to be able to report this behavior of the customer, and then making sure that other institutions become aware of it, right? That is very important. Now, if the customer pays back on time, right? That again indicates a positive behavior on the customer's part, and again the credit bureaus should become sensitive quite quickly to this and be able to make this available to other institutions, so that now the marketplace becomes efficient. Right now you can see how the marketplace becomes very efficient with this, right? So they have to become more real-time-ish and more cost-effective, and that is the way again for the institutions that are serving bottom of the pyramid, right? They would benefit from these changes, these evolutionary changes to credit bureaus as well, right? As to few institutions mastering data or keeping a lot of data about customers, I think in the short term that will be very efficient, but in the long term that will be to our detrimental.
Okay. And how many credit bureaus are there?
Today, if you see, right, again, you've got bureaus like CRISIL, CRIF, Experian, and CIBIL, right? There's enough competition, so it's not as if there has to be more competition, right?
And these bureaus are getting data from all stakeholders equally, like Experian and CIBIL get the same inputs of data, like, or is it that say banks choose, okay, I will send data to this bureau but not that? Like, what is the...
No, so even credit bureaus are regulated by RBI, right? So the rules of the game has been set by RBI, right? Not every institution can become a credit bureau. You've got to apply for it and then become one. And once you become one, then you become eligible to get data from all the banking and NBFC institutions.
And what is in it for the banks to give the data to so many different bureaus? Like, it's just a compliance requirement, or?
So compliance requirement notwithstanding, right? Banks also benefit from the existing knowledge that we have derived about customers, right? So the bad behavior becomes recorded in the system and it becomes available for everyone, right? And this actually acts as the safety net against bad behavior uh, on the customer's part, right? Because if nobody is looking, then there is always that incentive for the customer to take and not pay, right? So that's what used to happen before the credit bureaus became commonplace, right? You go apply for a loan with one bank, don't pay, then go to another bank and then apply for a loan again.
Okay. And what does it cost for accessing the report of somebody through a credit bureau?
See, it is a spectrum. For the basic data, there's a pricing. For extensive data, there's another pricing.
But what's the range like? Like you said, it's expensive. So, I want to understand.
You're looking at anywhere from few rupees to few hundred rupees.
So, few hundred rupees won't work if you are giving very small value loans.
Correct.
Right,
Correct.
right. Okay,
Correct.
okay. And these credit bureaus are not that tech savvy in the sense like they could have an API integration with bank and get real-time information and that real-time reflected in the reports which get pulled out. But that is something which none of these bureaus are currently doing.
Actually, credit bureaus are quite tech savvy. I wouldn't. In fact, if you see, most of the things that they do is around technology and data science, right? And they attract some of the best minds in the industry to go and work for them.
Okay.
If you like the Founder Thesis podcast, then do check out our other shows on subjects like marketing, technology, career advice, books, and drama. Visit thepodium.in, that is thepodium.in, for a complete list of all our shows.